Good NFP day, everybody, TGIF. Thank you, Patrick. Good morning to you. Good morning, Ziggy, William, everybody. Hope everyone had a good week. Blake has some announcements to make. I just have a couple of things to say. Yesterday, during the ECB press conference, while Steve was talking, I interrupted him, which I do. I interrupt everybody. Said we had a negative candle forming here on Euro. Wasn't really taken seriously because there was a bullish stance by Steve. Anyway, here we go. This was a pretty negative day, actually leading to a negative week. So when I look at the way things are set up here in Euro, if we get a weak number, I would lean towards, my bias would be to sell a rally back towards about 360 or so and see if yesterday was for real. Maybe we're going to get a test of 1.5 again. Going over to the oil, been calling this all the way through for quite a bit. This break, and we had this rally this week and said shorted again. We're sitting right on the support at 60, trying to bounce here. I still think it's vulnerable. And the thing that did not work out for me, and I really thought I had it going after the Stevie Cohn resignation, was the S&Ps. But I still look at this rally. Maybe it could extend. There's an off number around 43. I know some people are looking for these highs to be tested again. Some people are looking for new highs. I'm not quite sure. I still have a bearish bias. It's a pretty good week we've put in. So we'll see what the NFP has to hold for this too. And I think that's about all I want to talk about. I guess something happened in the member chat that Blake wants to address. So are you ready to do so, Blake?
Give me 1 second, buddy.
Okay. So anyone catch the euro on the downside yesterday after that negative candle? Oh, thanks, David. Hello, Val, David, Nick Lauka. Simon caught it. Beautiful. Both ways. Mike Karuna. Mike, your video about the earthquake, it wasn't a geological one, but that's when the stock market fell apart. So we had a little bit of an earthquake in that way. Nice to see you in here, Mike. Good, Richie. Glad for you. So in our community, we celebrate others' successes. Okay, Dan's there. Dan was there. Okay, great, guys. Congratulations. Okay, go ahead. Okay, buddy, hey. What happened?
Okay, so if you guys are ForexAnalytix subscribers and you use our chat room, I'll just quickly explain this to you. We build everything from scratch. There are, except for the chat room. Okay, so let me just start by saying that. And you guys, if you're in the chat room, you can say hello. We had an issue with the chat room because we used a different provider for a chat room, because trying to build this with all the different functionality it would be very time consuming. It would have taken us a lot longer to integrate into our back end and all the logins, and so we decided, okay, we're just going to use a provider to do this. Well, the problems when you do that is when they make an update to their API or how we talk to them, they don't always communicate that to their clients, and that is exactly what happened last night. And so we had an issue with our logins from people that were trying to get on via mobile, whether it was an iPhone or Android app phone, and we had to one of our developers, he is European, and he has been up literally since it's probably 4 o'clock in the afternoon, where he's at, and he's been literally working since like 4 o'clock in the morning, like, and it's a Friday, nonstop. So it's been quite a harrowing experience. And okay, you guys, I'm gonna go ahead and get rid of you now. I'm getting a lot of funky comments here about talking about back ends, and that's not what I wanted. Anyway, it's been quite an experience for all of us, and challenging. And poor Steve has been up all day, all night, dealing with this as well. So I'm sure that Steve will be able to attest to this. Is thank God it's Friday, and thank God it's Friday. I'm going to say that too. I'm happy. Excuse me. I'm happy that it's almost over. Anyway, let me talk a little bit about the good and the bad and the ugly of yesterday. So you were talking about the euro dollar. Yes.
Sorry to interrupt you before you start your analysis. Speaking of the chatroom issue, if any user has a problem logging in from the mobile phones, the only thing they need to do is like log out from the application, kill the application, start it again, and chatroom should work just fine for them.
Great. Okay, fantastic. So thank you, Steve. That's good to know. And that was one of the things that I had to do from my app, is actually kill the app. Like if you use an iPhone, it's different than, probably how you do it with an Android, I'm sure. And an iPhone 10 is different than an iPhone, let's say 8 or 7. So you actually have to manually kill the app and then restart it. So, but hopefully we're past this issue. We seem to have, most of the trader with 100 people in our chat room right now, which is, a little less than normal, but we're pretty much back up to where our normal daily, people are at. So that's good. As far as our intraday people chatting around. So that's great. It's been, then thank you, Steve, for getting all that worked on. Okay, let's talk about the analysis, especially with non-farm payroll today, because I'm going to have to pass it over to Steve in about 15-20 minutes here, or in about 20 minutes here. So yesterday, I got caught being long the euro dollar, which really stunk, because I actually had yesterday morning, by the time I started right after actually the ECB, I was having one of my best days of the year, literally. Huge day for me. Huge day. I was like, man, what a great day. I literally had like 7 losing trades in a row, trying to buy this euro on these dips, and not just the euro, but the euro Aussie. I tried to buy the euro New Zealand, which came under pressure. Here's the euro Aussie, as it was dropping through here to support. I got chopped up in that. Excuse me. Euro New Zealand, I got chopped up here. I just literally by lunchtime, I almost got back to break even. I was slightly positive. That's how bad my day had turned. I went from almost the best trading day of the year for me, of 2018, to almost a break even day. Now, I was telling the guys and gals, I was so upset yesterday. Some of the guys were like, hey, at least it's positive. I almost would rather have a losing day and have just a trade go wrong based on risk reward, and say, okay, well, I had the right entry, it's just the wrong idea, versus losing trade after trade after trade, trying to buy, go counter trend and whittling away my profits. That was really a confidence breaker for me yesterday. And I'm just, I'm explaining this to you guys, not because I have to, but I'm explaining this to you guys because I want you to understand the psychology behind what I was doing. When you go from having such a great day to literally almost break even, slightly positive, which I ended up positive for the day, and I'm going to tell you why here in a second. it's demoralizing. It was demoralizing. Like I said, I'd almost rather have a down day and say, okay, well, I bought the euro dollar at support, and it broke through support and popped my stops. But I timed it the way that I wanted to time it. I got in where I wanted to get in. I just was wrong. I'd rather have that happen to me than me just bleeding out money 7 different trades in a row. Okay. And that's exactly what happened to me yesterday. Now, I'm going to tell you what was a confidence booster to me, because you guys know that I've been buying the Canadian dollar and selling the dollar Canadian, which has been a tough trade. But yesterday it rallied up to, it was sitting right here, okay, at 129.50. I sold some dollar Canadian because I knew it was within my I was getting close to 130, and we were 130, meaning the highs of 130. We were at a 618 retracement. I said, you know what, I'm gonna short the dollar Canadian. I'm gonna buy some Canadian dollars here. I'm gonna sit in it because I think it's gonna roll back over, and that's gonna be my last trade of the day. That's exactly what I said yesterday at like 2 o'clock in the afternoon Eastern time, or 1 o'clock it was lunchtime my time, and I said I'm just gonna short it. We're at the 618, and that's it. I'm just gonna walk away. And I actually was running around running around my house, just trying to keep myself not in front of the computer. I just had my stops in, and fortunately at that point in time, the news came out that that the U.S. was going to exclude Mexico and Canada from the tariffs, and the dollar Canadian went from 129.50. It dropped all the way to 05 or whatever. I got out at like 129. I want to say 129.18, somewhere like that, and I made it quick. It was a nice gain, and it put my head back on straight. It gave me that confidence back, and then I continued to from there. I actually bought the Canadian again on this bounce overnight. I sold it overnight and made back a little bit of money. I didn't get back to where I was at, having one of the best days of my month, but it got me. It actually did a couple things for me. It kind of got my head back on straight, and got my confidence back, and also at the same time it kind of reset me, because what I was doing is I've had a pretty good week in trading, and I was getting a little careless, and so now I'm much more cautious based on what had happened yesterday. So it was a good thing. Now let's talk about today. All right. Last night, and by the way, the reason why I sold some dollar Canadian last night, I was actually long Canadian yen going into yesterday evening. I took profits off the table last night at 70, right here at 70. I bought it at 44. No. I bought it at 44 and I sold it at like 65, something like that. I made like a 20 pip gain here yesterday evening after the announcement about North Korea inviting Donald Trump to meet, Kim Jong-un, and that I figured was going to be a risk positive move. And when the dollar yen broke above this downtrend line, I knew that the Canadian yen is where I wanted to be. I wanted to be selling, buying Canadian dollars, or, in this case, it would be buying Canadian yen, because I knew the Canadian yen had been grossly oversold anyway. So I picked up some of that, and it was good. And I was short some dollar Mexican peso, just small, made a little bit of money back, but I'm not back to where I was at yesterday, at my high water mark, if you will. But again, I'm looking forward to today. There's really, you look at non-farm payroll, we're expected to create 200,000 jobs, basically. It's once again, we're going to be looking at wages and making sure that our average hourly earnings you know, continues to, you know, do better than, you know, previous. Previous was 0.3%. Actually, the market's expecting 0.2%, but having average hourly earnings at 0.2% or even higher is going to be good. Unemployment rate's supposed to drop to 4%. 4% unemployment. Okay, we're expecting some pretty decent numbers, and so what I'm looking for is, if the numbers are good, I'm expecting the dollar yen to continue to rally with risk. I'm expecting this you know, dollar yen to continue to rally towards you know, 107, 107.50, you know, and re-challenge the underside of this trend line. Now, obviously, if it's a bad number, the problem with the market right now is the market's caught long the dollar yen. I mean, that's a problem. Well, I say caught long. You got people that are covering shorts right now that have been since last night. You have people that are entering long trades expecting a move back up to 108. So the problem is if we have a weak number, you know, the dollar yen longs from overnight are going to get caught a little off guard. But I don't think I would trade the dollar yen short on a weak non-farm payroll number. I don't think that's the way I would approach the market. Personally, I think the dollar Canadian is a good setup if we have a weak data point. Now, also, it's Canadian. You know, we're expecting Canadian jobs report as well, and Canada is expected to create 23,000 jobs. Unemployment rate is supposed to stay the same at 5.9%. But regardless, you know, if we have a weak U.S. number and especially a strong Canadian number, the dollar Canadian, I think, is going to be a really potential short trade here. Now, let me also stop by saying that the news about the tariffs and excluding Canada and Mexico, it's very bullish the Canadian dollar. Okay. If you think about, we talked about this yesterday. If you think about this, Canada and Mexico have 30 days, because that's when the next NAFTA negotiations start. They will continue to be excluded from the tariffs as long as they, you know, come up with a proper plan on, you know, how they're going to improve trade with the U.S. and yada yada yada. That is only going to eventually benefit the Canadian dollar, because as the U.S. imposes tariffs everywhere else, and same with the peso as well, if they impose tariffs everywhere else, but they improve trade with Canada, Canada is going to end up being the beneficiary. Like, you know, if we end up importing less from China, but then eventually more from Canada, but still we have a better, let's say, quote unquote, deal with Canada, it's going to benefit the Canadian currency, in my opinion, and the Canadian economy. There are not a lot of things that I agree with President Trump on, but one of them I do agree with his approach to the trade situation at this point in time, and how he's going after ultimately China. And I agree with how he's going about it, or how their administration is going about it. So, and I do think ultimately it's going to be better for Canada and better for Mexico, as long as they continue to play ball with the U.S., and which I think they're going to, because, you know, the United States holds all the cards at this point in time. So anyway, I believe that we're going to eventually work out some sort of deal, which will be improved for the U.S., but will ultimately benefit Canada and Mexico moving forward. So we'll see how everything shakes out, but I believe that the dollar Canadian is going to eventually break through this 128 level, and once it breaks through 128, I think we can revisit the 126 level once again. So this is something I'm paying very close attention to, especially today if we have a weak U.S. number and a strong Canadian number that's going to really, you know, put this pair lower. If you look at the candles here on the dollar Canadian, you'll notice these very long upper wicks. That tells us, you know, very clearly that the buyers are having a very difficult time keeping, you know, dollar Canadian elevated at this point in time. We had very divergent relative strength on this last rally, and you know, the risk is that we push lower at this stage. Now, if it's a weak dollar move, do you buy the euro? I honestly don't know what to do with the euro. I look at the euro right now, and it is in no man's land. It stopped. When we hit this support right here, okay, you can see it right through here. When we hit that support, I played it long, made a little bit of money. When we came back down and tried to break this support, I thought it was going to be a false breakdown. This is where I, you know, took a little hit yesterday, and then I took a hit again. Once we broke through that 123.60 level, now I really don't know what to do with the euro dollar. I don't know if I should be buying down here. We could have this argument where you could say, well, the euro is going to 125, and I could look at you and say, sure, I could agree with you. You could also argue with me and say the euro is going down to 120, 150 again, and I could look at you and say, sure, I can agree with that as well. I don't have a strong argument for the euro dollar. I don't. I can't justify it. You know, I can justify going in either direction. Therefore, I don't have much of an opinion on the euro, and I don't know how to trade it. So when I don't know how to trade it, that means I'm not going to trade it, if that makes any sense to you guys. Okay. And Fred, or excuse me, Forex Gal said Draghi. Yeah, and Draghi, it was way more dovish than his statement portrayed. The statement seemed a lot more hawkish than when he talked yesterday. He was you know, a lot more dovish and less hawkish than we had thought, and that's what eventually you know, hit the euro. So at this stage, I'm not dealing with the euro. I don't even know what to do with it. You look at some of these other pairs, like here's the pound. You know, look at this triangle that we're forming. I mean, I don't know what you guys want to do with the pound. I mean, you know, maybe sell it at 139, maybe buy it at 137.50. I mean, I don't know. You know, look at the Aussie triangle, Kiwi. You could argue that there's a triangle there. The Canadian is really the only one that, more from a macro standpoint, is the only one that I really see as an opportunity, and that is only with dollar weakness. So that kind of you know, screws me a little bit if you're thinking well, you know, if it's a bullish dollar number, what do you do? I don't know. You know, I don't think I'd be buying the dollar Canadian at this point. The Swissy has been unbelievably strong, and with risk appetite, if risk appetite continues to strengthen, I don't know why stocks just sold off. Holy cow! Did you guys see that? Is there a headline? Maybe some position squaring. Okay. Anyway, if risk continues to improve, I mean, you look at the dollar Swiss, and we've got a nice little inverted head and shoulder pattern here. Also, I guess we should, in the same light, we should probably talk about the U.S. dollar Mexican peso. We're near channel support here, so approaching channel support. But today is kind of it's not cut and dry. It's not very clear. I'm not really too sure where to go, other than I want to be short the dollar Canadian, but if it just drops through the floor, I don't know if I'm going to have to, if I'm going to chase it or not. So really the only thing that's on my radar right now is the dollar Canadian. And you know, with that being said, I'm going to turn it over to Steve, because there's probably better opportunities in the cross rates than in the dollar right now. Steve, how are you doing, and are you managing to stay awake after last night?
Yeah, I'm okay, mate. I'm okay, thank you.
What a nightmare. You
Not the first rodeo.
yeah, right. Well, you know, Steve was like, see, this is why we built our own stuff. And that's exactly what he said to me last night. And I'm like, and it was such a pain. And as Steve was basically the project manager for all the technology of ForexAnalytix, it was a pain building this by hand, but we are in control of what happens with it. When things are not built by us, they can get out of our control, and they can happen, and they're not in our control, and then we have to put out fires like we saw last night, correct?
That is very, very true. Very, very true.
Yeah. So, well, we're not going to bore you guys with all the technical stuff, but Steve, I'm going to pass it over to you so you can you know, show everybody what's happening with non-farm.
First question.
And I'm here for the numbers as well.
Perfect.
Hey, Stelios.
First question: which side of the market you think will give us a bigger reaction if we get a higher or lower number? So I think if we get a blowout number, like a good number, like let's talk like you know, unemployment's at 4% as expected, average hourly earnings actually stay at 0.3%, and let's say we create 280,000 jobs, the dollar yen's going to 107.5, maybe 108. Okay, but I was asking in general if you think that the dollar is more prone to respond positively to good news or negatively to bad news.
Positively to good news.
Yeah, I agree with you.
Oh my God! Look at the stock market. Look at the Dow right now. Just as
also, guys, my humble opinion, I think the average hourly earnings number is more important than payrolls at this point.
I agree with you.
Employment numbers are good. We know that. You know, plus or minus 30, 40, 50K is not going to do any difference, but that's where we want to see if hourly earnings keep creeping up. That's the main one, I think.
All right, guys. Hey, good luck. I gotta sign off. So good luck, everybody. TGIF. Thank you all for being here.
TGIF, man. Yeah, there's no question. The market is really focused on what happens with inflation, and in that sense, it definitely, I think, average hourly earnings are going to be you know, the most important indicator to watch. By the way, this is USD yen. We're going to be watching it very closely. Blake already mentioned it. We had a new low. We had RSI diverging. We said that if we actually break below this zone and the 127.2% extension, then, you know, there is a pocket of thin air, and we could have moved a lot much lower from there. But, you know, this level held to the pip actually, and now we're retesting like a broken triangle. Obviously, good number can easily bring back USD yen to retesting this large triangle support as resistance.
Steve, did yesterday's action in the euro, and I know yesterday you weren't expecting what happened. Yeah, but has it changed your view? Has it changed your view? No, I brought it up and you just kept talking over me. But anyway, if you look at the euro now and the dollar now, does this one day change the picture at all?
No, it doesn't. We got a nice evening information here in the Euro USD, but all in all, and I said it yesterday as well, even if we get a negative reaction, this is still a corrective move. I mean, it has all the elements of a corrective move so far. You know, you can never be sure when a corrective move is over, but definitely there is still nothing impulsive with the price action of euro. Nothing. Absolutely nothing impulsive.
So it would probably take closes under 121 for that to change, or would it be more the nature of the pattern?
It doesn't, and close below 121 is not going to be enough. We'll also need to see a change in the behavior. So, you know, if we break below 121 by having slow price action, still it's not going to be enough.
So it's a structure that's more important than the level, as usual.
Actually, yes, but I think the combination is the most important. You know what I mean?
Okay.
So let's see. Stelio, do we have the numbers?
Average hourly earnings are 0.1 lower than expected.
Oh my God, 330.
That's big.
Whoa, that's a huge blow-off number. 313 versus 205 expected. Canadian data a little bit weaker. Canadian employment a little bit weaker than expected. 15.4 versus 21 expected. Obviously,
non-farm payrolls also revised higher from 200K to 239. So payroll number is very strong. Very
payroll
strong.
number extremely strong. Yeah.
Yeah, stock market likes it.
Yeah, obviously a blow-off number, honestly. Yeah, so we got plus 40K from revisions of last month and more than 100K over what was expected for this month. I mean, you can't get a stronger number than this. Unemployment remains constant.
I don't know if you noticed. Have you seen metals? They haven't done anything on the number.
Here's gold, by the way.
They did hold up pretty good with dollar strength yesterday, though. Still,
gold. Although, Stelio, if you noticed, gold is pushing lower now. Quite strongly. And it's not only that actually. Gold was the only thing I was watching in my screen reacting strongly just before the NFPs, like a few minutes before the NFPs. Gold was already on the move, which was a little bit strange. Because the market was holding off in everything else, but gold was selling off in advance for some reason. It's like it wanted to react in advance. Okay, obviously USD yen is
on a number like this. It's moving 0.5%. It's we're used to metals going berserk on numbers like this. But anyway, let's.
By the way, the reason why unemployment stayed at 4.1. and didn't go down to 4.0, especially given the very high number of jobs added, is the fact that we had, after a long period of time, quite a big jump in participation rate. Participation rate came in at 63%, with prior being 62.7, and if I remember, we were at 62.7 even the month before that. And the expectation was for participation rate to remain at 62.7, but participation rate increased to 63%. And that's the only reason why we didn't see a peak lower in the unemployment. So it's not a bad thing. I mean, it's a good thing, actually. Theoretically speaking, you want to see increased participation. So USD yen is responding, well. Stocks do like the sprint. The weird thing is that the cable is almost at the highs of the day. So, cable definitely not showing some dollar strength. And euro is also seems to be catching a bid against the dollar, which also doesn't make much sense. The only thing I can think of is we had average hourly earnings slow down a little bit to 2.6, Stelio, from 2.8 year on year.
Hold on, let me check.
And probably that's the reason why dollar is not staying at the highs. So yeah, we had a slowing down, and this more or less proves what we said before, that the market was more focused on the earnings than on the jobs created, because that's the only thing that actually missed. Everything else, beat expectations spectacularly. So yeah, we had a slowdown to 2.6 year on year in average hourly earnings. The previous print was 2.8, and the expectation was for this month to stay at 2.8 on a year on year basis. So okay, yeah, that's the reason we're seeing some dollar weakness, and we're actually seeing it across the board. Here is Aussie. Aussie is catching a bid. Here is the euro. The euro is definitely off the lows, as you see. It's almost approaching flat. Here is the cable. Cable is positive on the day. Let's have a look at USD CAD, because we also had Canadian data. Here's the CAD. CAD actually pushing below this channel. Watch out for 127.80 to 128. This might act as an area of support. But definitely, there is a little crack here in the bullish trend, because we are breaking below this ascending channel. Even if you don't want to see the channel, if you just want to see it as support trend line, we're still cracking below it. So, regardless, keep in mind that USD CAD had moved quite fast from 122.50 up to 130. So, a corrective move lower at some point would definitely happen. As I said, what's 127.80 to 128? We might get some support there. Euro is now back to unchanged. So as it seems, the market 100% cares more about what happens with inflation than anything else. Because as we said before, the NFP print was an amazing one. I mean, we beat by like 110,000 jobs more created than expectations. USD yen is, holding quite well, a little bit off the highs. Let's have a look at what treasuries are doing, because that's quite important as well. There we go. Treasuries are more or less unchanged on the day at the moment. But, as we said, keep in mind that this price action for treasuries, we were hoping ideally for a rebound higher towards the 123 area. But, the price action after breaking above this descending wedge is extremely weak. So unless we see like some momentum coming through, which is completely absent at the moment, I think that treasuries look very very weak, and they look prone for a continuation lower. So I think more or less we can go through and have a look at questions, and of course we will keep monitoring of what's happening in the markets. We've already now seen the initial reaction. So let's go through a few of the questions, and tell me if we get anything else.
Of course.
Tell us to stop, book everything home, and it says if we ever had a really great or bad day, the boss would tell us to stop, book everything, and go home and cool off. Yeah, Andy, I know that's actually quite a common practice. My uncle was like an FX trader like decades ago, and he was very high level, and they used to do the same since back then, like decades ago. It's very common practice. Thank you, Eric. What's more important at this time, the jobs number or wage growth? We already answered that, Bob. As you see, the market's reaction is a testament that indeed the market is mostly focused on whatever is considered an inflation indicator. In this case, average hourly earnings is a very, very strong inflation indicator. Then the number itself. The market has completely gotten used now to getting decent amount of jobs added every month. And what the market focuses now on is if actually there is inflation coming through. 123, that's the pivot. It looks corrective. Yeah, on it, I agree 100% with you. The price action of euro looks 100% corrective still. Nothing has changed, because we had a bad day yesterday. Imagine Dale complaining about being talked over. Still triangle after still a triangle after impulsive. 1305 is a pivot. Yeah, that's for USD CAD. Love you USD CAD says done. Bearish 10-year note. Okay, let's have a look at this chart from Ronit of the 10-year note. Oh, this is the yield. Yeah, okay. Yeah, so in essence, you're looking higher for the yield, so lower for the bonds. I agree with you. Correlation rates and crude. Let's have a look at this chart as well. Yeah, it's quite high due to the dollar relationship here. Yeah, it's almost same strong. Euro Draghi removes accommodation, it goes down. DXY blowout jobs number, it goes down. Are we focusing on the right things? Yeah, Bill, this is not the first time we see that in the markets, right? Markets act preemptively very often. For example, we've found major lows in the dollar in when we were announcing quantitative easings, and for example, we've seen which obviously makes no sense, and we've been seeing like bearish trends of the dollar when actually quantitative easing was finishing, etc. So it's not the first time we see market reacting oppositely to what common sense would actually indicate, right? Anyhow, we are now seeing dollar strengthen somewhat once again, so the market is reassessing a little bit the situation here. As you see, treasuries are trying to move lower as well. If we look at the USD yen, I bet must be again near the highs of the day, and yes, it is. So dollar finding a little bit of a bid here. As you see, USD CAD is also finding a bid. It has already retraced like almost 35 pips from the lows. Let's have a look at a few more pairs as well. USD NOK remains in a triangle, no surprise there. USD SEK is pressing the highs. If you remember, we were saying the other day that, despite looking here for a rejection, the price action that we're seeing since finding like a near-term top here is clearly corrective one. So in all honesty, I'm viewing this as some type of a bull flag, and I think that the chances of a continuation higher are quite high. So this is what I'm seeing here. Something like this. Okay, so be careful here. I think USD SEK is not done pushing to the upside. Okay, Euro once again near the lows of the day, currently testing the 50 daily moving average. So the market actually reassessed. For some reason now it thinks that, which I don't disagree with that the NFP number was too strong to ignore. And at least basic economics tells us that the more unemployment goes down and the more jobs we create, the higher the wage pressure is going to be. So even if we had some cooling off in the average hourly earnings, theoretically speaking, a market that keeps creating jobs and keeps pushing unemployment lower, sooner or later should face some wage strength, right? So I'm guessing that the market thinks now that the NFPs were too good to ignore. Cable also like taking back, paring back some of its recent gains, but in general, so far the market doesn't seem. I mean, the only market that didn't back off from its initial reaction are stocks. So they responded positively quite immediately, and they remain near the highs. And let's have a look at what's happening actually with metals. Yeah, gold is pushing the lows once again. So what's this trend line? Gold might be likely in like this huge triangle. It remains very choppy. There is no question about it. We said many times, that gold doesn't, gold and silver don't look good in the sense that they've been extremely choppy, and most likely you'd rather let them do whatever they want to do until we get some clarity here. Copper has turned positive on the day. So far is creating a hammer. I still insist that the price action of copper still looks a corrective one to me after an impulsive move higher. So I would in all honesty expect this consolidation to be resolved to the upside once again. Let's have a look at the Nasdaq, because the Nasdaq is the only index that actually has been pushing the highs, and here we are actually. Nasdaq, as we speak, just a while ago, was testing the all-time high. So Nasdaq looks quite well, but notice the very, very strong RSI divergence. So we like matched the all-time highs in the Nasdaq, but look how much RSI is diverging, right? We got another retest of the all-time highs, but RSI is clearly divergent here. This is something that you probably shouldn't dismiss. Here is the VIX, by the way, to have a look at it. The VIX has been steadily pushing, towards the 200 EMA once again. It has already made a large move. I mean, we went from above 50. At some point today, we were even below, below 14. So, quite a move. But definitely we're still quite higher than where we used to be for a long period of time, right? So in my opinion, you shouldn't get complacent having to do with stocks, especially US stocks. Let's have a look at the DAX. If you remember, I explicitly mentioned that if I had to be long one index, that would have been the DAX, and the DAX is still responding very nicely after it came down and retested multiple areas of support here. So, we said at the beginning of the week that, listen, after seeing this day, if I had to be buying something, that would be the DAX. Keep in mind, though, that, once we get back to this trend line support of this expanding triangle that acted already twice as resistance, there is the possibility that it's going to act once again as resistance. So definitely this is going to be a major test for the DAX. If we do break above there, then all is fine. If we get rejected once again, then obviously we will refrain from switching our bias. But for the time being, the rebound looks good. Let's have a look at the Nikkei as well. The Nikkei is more or less responding in the same manner. Found a confluence of supports. Has been rebounding since, hasn't reclaimed though, hasn't managed to reclaim any major levels. I mean, it hasn't broken above any major levels. We haven't even reclaimed this high, the corrective move higher. So, so far, I have to say that Nikkei looks one of the weakest in my eyes. As long as we remain below 22,000, like 22,500 roughly, I think that it's vulnerable. I mean, it can easily roll over once again and see a move towards 22,000. Average worksheet rose to 34.5 hours from 34.4 last month. Okay, some data here. Let's have a look at bonds again, because I think they're attempting to break down. Yep, they are. Here we go. Bonds at the low of the day, already lower than they've been since last week, on a daily closing basis at least. The RSI structure also tells me that this move was just a correction, because if you see RSI creeped back to 50, which is a very neutral level, with price having done very, very little. And usually this is a very corrective structure for an RSI. So, everything here in bonds tell me that, we're never getting back there. And, we might have even found a high here. I might attempt new lows from here. Okay. Euro bonds chart from Ronit as well. Let's have a look at it. Yep, breaking down. Let's have a look at bonds here. Bonds, on the other hand, are holding much, much better than treasuries, for sure. We didn't quite reach the 38.2, but we might. And this divergence that you see here, the much, much stronger move higher in bonds in comparison to the much, much softer rebound in the treasuries, indicates why we're seeing also some weakness in the Euro USD. I mean, yield differentials here do benefit, a little bit of a weakness. But, as I said, still nothing impulsive to this move. Same applies to the cables move, right? As you see, the corrective pattern still unfolding, and it might even produce one more low towards 136. That's not out of the question. But definitely, this whole structure remains corrective. Nothing impulsive to it yet. Absolutely nothing. Dan says that we had a false breakout on the euro pound, but I disagree. I think that the euro pound never broke out, and we actually showed that. Look at this. At least that's how I was viewing it always. I was viewing this as a descending channel, and as you see on a daily closing basis, we never managed to break out of this channel. If you remember, in the middle of the week, I was saying that, yesterday, I was saying that a lot of euro pairs are at quite critical junctures ahead of the ECB, and one of them, I said, was the euro pound, because it had already been testing resistance for like several consecutive days, but it had failed to penetrate through it. And as you see, this is another rejection, and that's exactly what we had drawn, that a possible breakout from there might even lead to a new high. But there is a good possibility for a rejection there, in which case, why not even push lower in the channel? What remains to be the case, and I was insisting on that for a long period of time, is that this price action is slow, choppy, and overlapping, right? So it's corrective. And that's why I keep thinking, and if you remember, I mentioned it explicitly, that my bias and my preference would be for another move to the downside before higher. So ideally, I would want to see this range break to the downside, come down perhaps to the 83 area, 83, 50 area before higher. And if you want to see that on a weekly chart as well to get a better idea how and why, here it is. You see, ABC, right? Currently C missing. Something like this. So I would still prefer to see this breakdown than see it break higher. I know it's a little out of context today, but the Nifty has taken support of the 200 DMA. Could you offer a quick confirmation? Absolutely. Let's have a look at it. There's no problem, mate. Let's have a fast look, though. First, if something else has moved in the markets. And okay. Let's have a look at the USD again as well. So nothing really has changed the markets. I mean, more or less, dollar has caught a little bit of a bid, but nothing to write home about. Stocks are near the highs of the day. So not really a follow through from, I mean, we had a little fade of the initial reaction, but we came back to more or less where the initial reaction had taken us, and now the markets seem to have stalled. So let's have a look at the Nifty for you, mate. Yeah, 200 DMA is holding for now, but I need to insist that there is nothing in the short term that looks constructive in this. So for example, as long as this trend line is holding, I would still stick with the scenario that we might have a resumption lower towards this area. Okay, now, for me to be persuaded that the corrective move lower is over, which, given the fact that we had a strong move to the downside, clearly a consolidation, and the continuation lower has been very small, I would like it to see a bigger one, like a bull flag being completed. I would be very, very careful being long here still, right? I would need to see a much, much stronger reaction than this to be convinced that we found a tradable low. Let's see if the 200 EMA can do that for you. But personally, if I had to be something, I would still choose the, in the short term, I mean. If I had to be something in the short term, I would still choose to be short. DXY seems to be stalling at this 61.8 retracement. Maybe it has made a B on the 4 hour, now down to C. Do you have a chart to give us, mate? I can show you what I see in the DXY. But it's better if you show me what you're seeing. I'm guessing, if I take it down the 4 hour chart, that this is the 61.8 here from this move lower, and you're talking about one more move to the downside, right? Okay, yeah. Yes, that can be it. But you know, if we want to see the big picture here, I will tell you the following. We have an expanding triangle here, and you know, we're a little bit higher than the middle, obviously. But in my opinion, especially as long as we stay below 91 and above the lows here, we are more or less in the middle of nowhere. But being in the middle of nowhere in a strong downtrend, we need to favor the downside. I'm currently not short the dollar, so you know, I'm not advocating dollar weakness, but I'm saying that, you know, currently dollar is just chopping around decently close to the lows. We still haven't seen some impulsive move to the upside. We still haven't broken even the first area of resistance that is relevant, which is the 91 area. So, you know, if you had to choose something wisely, probably remaining short, you know, sticking with the trend, you know, would be the wise choice. But, you know, I think that dollar needs patience. Dollar needs patience as it stands. I have to tell you, though, that although I would like to see some bullish move from the dollar, this price action looks corrective to me. And a corrective price action when the trend is lower means that the chances of a continuation to the downside are obviously much higher than move higher. I don't know, perhaps dollar just wants to print one more low, get even more people trapped, you know, being short, and then perhaps like give us a big reaction to the upside, a big corrective move. Because as I've said, Stelios has said it as well, Blake has said it as well. As far as I know, the vast majority of us in ForexAnalytix agree with that. Our long-term thesis for the dollar is that it's going to be moving lower. But that's a long-term thesis. That does not mean that the dollar will keep moving lower, you know, indefinitely and not give us any big corrections or whatever. Especially whenever you see, you know, sentiment and positioning being extreme, you just need some kind of a catalyst to see some you know, explosive moves to explosive counter trend moves, which at some point is going to happen for the dollar, right? Dale, do we have an interview today? Because it's 4 o'clock. I mean, 4 o'clock. It's at top of the hour.
Not today.
Okay. Okay. So I'm not seeing any real follow through here. Dollar is almost unchanged on the day, as you see. If I zoom in, this is the daily chart, and as you see, so far the dollar has just managed to print a spinning top, which is clearly an indecision candle so far. Nothing much has changed with the euro. Nothing much has changed with the cable. Stocks remain at the highs, like the like 0.66% higher the SPX. Gold is probably still near the lows. Let's confirm that. It's a little bit off the lows. Yen should be close to the highs. bonds seem to be breaking lower as expected, but no real follow through so far. So I think we need to remain a little bit patient, see how the week is going to close, the day and the week are going to close, and we take it from there. One thing is for sure, we've had some very nice weeks this year, some volatile weeks, some weeks with very clear direction, and that's why we also had a very good performance. I also saw in the chat room, many of our users were doing very good because these kind of markets are the markets are a true traders markets. But the past several days have been more or less choppy. So in my opinion, this is the a period in which you should be more nimble into going into positions and perhaps using less leverage until we start seeing again some trending conditions, right? So that's my approach and my point of view, and whoever wants to take my advice, it's up to you, obviously. Okay, so Dale, I think we can call it a day, and for the rest, of course, we're going to be sending updates at ForexAnalytix, and we'll see you in the chat room. If something last that I wanted to say, on Monday we're going to be starting the competition we were talking about. This is going to be it. We're going to give you, this is the, you don't try this URL because this is the test server anyhow, you won't manage to do anything here. So on Monday, Tuesday, and Wednesday, you will be able to vote for three instruments on your prediction or where they're going to close 2 Fridays from today, like 14 days from today. And the first winner is going to win a 6-month subscription to ForexAnalytix, the second one a 3-month subscription, the third one a 1-month subscription, and the first 10, regardless, are going to win a T-shirt, a mug, and a mousepad from ForexAnalytix. But we'll give you all the details on Monday. I'm just letting you know in advance. So thank you everybody, and have a great weekend.
It's the biggest. You're welcome. It's the biggest mouse pad I've ever had.
Yeah,
it is. It is a huge. Everyone needs it. You could also use it as a dinner placemat, so that you don't stain your coffee table. Right, Steve?
Yeah. Right.
Anyway, all right, guys. Great week. I just have one request for the 5 people that said, I don't know if you did it on your own or my eye helped point it out for you, and you caught the euro on the downside yesterday and part of today. I'm requesting that you use part of those profits, if you're not already, to become a ForexAnalytix member and subscriber. And with that being said, do your homework over the weekend. March has just begun. Let's have a great trading season and wrap up the winter into the spring equinox like champions. And I'll see everyone on Monday. Don't just count your euro pips from yesterday. Sign up with ForexAnalytix. See you tomorrow. See you Monday. Okay. All right, my trading warrior brothers and sisters. Take it easy. Great interview lineup next week, including Peter Bookvar. See you then.